After the past week of absolutely boring sideways trading in the TradFi markets, we're starting to see some life in the markets. Welcome back. This is Money Never Sleeps. You know me as Kevin. I'm one half of Money Never Sleeps. Obviously, usually it's Jay Webb that's here with me. But today he is out of town and I'm left here looking at some of the GDP data. We'll be back to having our regular live stream shows next week. But as always, if you can do us a favor, like, subscribe, drop a comment below, share us out if you agree with us. If you don't agree with us, we appreciate as much love and hate as we possibly can get, because at the end of the day, we're just trying to see, other points of view, maybe get the best possible assessment of what the market is and sentiment. And, obviously your engagement means a lot to us, and it also helps us, gauge how the markets themselves are kind of reacting, or what's the sentiment across the space. So extremely happy to be here looking at some of this GDP data. Not going to take too much of your time today, and I think we should just get right into it. And the first thing I just really want to bring up is the GDP, the gross domestic product. We got the Q1 results back. This is the advanced estimate. Obviously, these will be revised at some point in the near future, as all data seems to be revised in the past 6 months to, well, because lying is beneficial sometimes. But point is, I'm looking at this, and we can see that the gross domestic product came in at an annual rate of 1.1 in the first quarter of 2023. Now, it was 1.9. Some estimates were 2%. This is more in line with the Atlanta Fed had revised and estimated that this would come in at. And it's not necessarily negative. Obviously, if it was negative, that's bad. But for the macro view, but it does show signs that the economy is slowing down, the gross domestic product. It was last time in Q4 at 2.6%. So now that it's at 1.1%, the economy is growing, but it's at a slowing speed. So it is slowing down. Eventually, this could potentially get to the point where we do start to see some negative quarters again. We did get 2 negative quarters last year. That's technically a recession. However, we're not admitting that. So we'll see how it's going on. I believe that we are in a recession. I'm not a financial advisor. Again, nothing I say is financial advice. Nothing me or J Webb ever say is financial advice. We're just looking at this. We give you our opinions, what we're doing, but we can never tell you exactly what to do. And for me, I think that we are in a recession. This is just a belief that I've had. If we look back at 2007, 2008, everyone considers 2008 as being part of the recession. However, it did start in November of 2007. And there's just been a lot of buildup to this point where the markets are acting extremely weird. Like today, we saw that equities were up on this information while the bond market was down a pretty good amount. So it's really interesting to see how the markets are reacting. And again, this is coming out at a pretty pivotal time. I'm not saying pivotal in hopes of a Fed pivot. I'm saying pivotal as in, we're going into the monthly close. This is the first month of Q2 that we're getting tons of earnings the past week and a half or so. A lot of stuff's coming out. We have next week, the Fed's going to announce their rate hike. And then we have tons of other information. We're getting PCE tomorrow. So it's a really, really chaotic time right now. And not just in TradFi, in crypto as well. We saw tons of volatility. But for the GDP, obviously, we're looking at this, the advanced estimate. It's not great. It's not terrible at the same time. It's just going to take time to see how this plays out over the next few quarters. I anticipate that we do get some negative quarters going forward if the decline is continuing at the rate that it is. So when I look at this here, let me just pull up full screen so everyone can see what we're looking at. Yeah, there we go. We got, these are the quarters. This is the growth that we've seen. This is the percentage change from the preceding quarter. And we're 1.1% this time around. It was 2.6 last time in Q4. We're right in this area. It's going to continue going forward into this year. I anticipate that even if I'm just looking at this is descending at this point. Most likely it's going to see some negative growth. And arguably you can say that Q1, Q2 of 2022 is, the market reacting after the euphoria of COVID. Obviously, COVID was extremely negative for Q2. But then Q3, picked up significantly. But again, that's because it's so negative here. So we'll just continue to see this. But I do think that we are getting to a point where we're starting to run out of steam. Again, the money printer is finally, capped, at least for the time being. There's quantitative tightening. And I don't see this going positive for much longer. So we'll keep an eye on this and see how it plays out. Just some other stuff that we want to take a look at. Current dollar GDP increased 5.1% at an annual rate. This is in the first quarter of 2023 to a level of 26.47 trillion. In the fourth quarter, GDP increased 6.6% or or 414.1 billion. So when we look at this, we can see that there is a bit of slowing in increased percentage of the current dollar GDP, 5.1 versus 6.6 last time. Obviously, it's growing, but it's starting to stagger at the point where it's slowly waning out. The percentage gains that we're seeing on this. If we look at personal income, we have the current dollar personal income increased 278.9 billion in the first quarter compared to with the increase in the fourth quarter of about 400 billion. The increase in the first quarter primarily reflected increases in compensation, led by private wages and salaries and government and social benefits. So pretty interesting stuff there. And then let's look at real disposable personal income. It increased 8.0% in the first quarter compared to the increase of 5.0 in the fourth. So again, it's really weird to see a lot of this information coming back and forth where, yes, the economy is slowing down. We're not growing at the rate that we once were over the past few quarters. However, we are still seeing that consumption is pretty high and that people still do have some money on hand. And, maybe if when we look at this in the macro, it's not a lot compared to what we had, months ago, but it is enough to say that, this is potentially catastrophic and not necessarily something that the Fed likes to see. So it's really good to see this information and, assess what's going forward. And again, I just want to look at one more data point from this, and that is personal savings was 946.2 billion in the first quarter compared with 758.8 billion in the fourth quarter. Personal savings as a percentage of disposable income was 4.8% in the first quarter compared to 4.0 in the fourth. So again, this might be people potentially just moving into cash positions. People aren't spending maybe as much either. Like, again, it's weird that we're seeing consumption go up and people have the ability for disposable income. However, is that money going into the economy, and how is that going to impact, the rate hike and the GDP in the next few quarters? So is it really that interesting stuff? Kind of, but at the same time, it's like, okay, it's almost like a sit and assess how this plays out. This will be revised. Obviously, I anticipate it to be revised at least 2 or 3 times, definitely 2 times going forward. And it'll be really interesting to see that, how this plays out over the next few months. Again, I think that we're going to be going into some pretty turbulent waters in the next few quarters, definitely into the end of this year. I think it's going to be pretty volatile. And I wouldn't be surprised if we see some of that in the markets. Again, the economy is not the market. The market is not the economy. We say this time and time again. That's mainly just because the markets are, always forward thinking. So even if the economy is in the shitter, the markets already kind of priced that in months prior. But they don't always. We always have to be cautious that there are market makers that have more control over the markets than we would like to give credit to. And so that being said, let's move into some of the equity markets right now, because again, I was saying how bonds are down on this news, but the equities pumped pretty good today. So we'll stop screen here and we're going to present. Let's go to the DXY. All right, so this is the DXY here. We're looking at this chart. This is something that we bring up all the time. And if we look at this, we can see that the dollar itself is kind of down today. Actually, it's up. It's about up 0.07%. It was up a lot higher earlier, or this is the weekly, my bad. Yeah, there it is. There's a dollar. It's up 0.07. It was up a lot higher earlier. Obviously, we're at 101.81. That seems like the height of the move today. Again, we see the stochastic RSI is extremely overbought. However, I would like to point out this pattern that we're seeing here, and this is an ascending triangle. Again, this is more of a bullish setup pattern, and we see that we're trading in it. We've wicked down below it. However, when we close, we find support on these on this trend line that's going up here, and obviously our resistance is at 102.035. So we're finding support, resistance right around here. They're just hitting our ass, hitting our head, ass. I expect us to hit our head, ass, and then finally break out of this. And the thing is, the daily is pretty overbought, and the dollar's down here, and the dollar has been trading a lot based on news. Again, we saw that the yuan in China has been pretty strong. There's a bunch of other currencies in the global markets that have been asserting their dominance against the dollar. There's tons of stuff that's going on. Again, the Fed, the worse inflation gets, the higher the dollar's going to go. But the sentiment right now seems to be that the dollar is probably going to go down because the Fed has raised rate hikes so much, or has hiked rates so much to the point that they're probably going to pause and then eventually pivot some point this year. Again, that might be a pipe dream, but we will see how this plays out. I'm looking at the hourly, let's look at the 4 hourly first. We can see that we are just trading in this pattern, and we're not completely overbought in this 4 hourly, and then we came down, we got rejected off the 50 EMA. So I wouldn't be surprised if we bounce off this a little bit, and then we start to make our move to the upside. On the lower time frames, we might have the strength to push up more than we would on the daily time frame. Obviously, the stochastic RSI is pretty overvalued right now in the daily, but if we look at the 4 hourly, we have plenty of room to the upside, and we're probably going to retrace a little bit down after this candle here once that closes in about 14 minutes. So it'll be interesting to see if we find support once again. If we do find support here, again, there's a little bit more of a range, less of a range that we have, and more of a momentum to the upside. So I wouldn't be surprised if we go up here, maybe get rejected up by the 102.303, the 200 EMA on the 4 hourly, and see if that's potentially, some resistance. This is obviously resistance, but if you do break above and maybe get a wick, it might go right to there. So it'll be interesting to see how this plays out. But yeah, ascending triangles are a bullish pattern. And again, I think that we got our double bottom already. One tap here, double tap there, and we're seeing this on the daily pattern. The daily, we're seeing this W double bottom pattern. So we're seeing, maybe it's bigger than this. Yep, there it is. Okay, here's the first, we're just waiting for this leg up to finish this W that we're making in the pattern. And obviously, if we break above this blue line, our next level of resistance is going to be where the W, the peak was in the center. That's going to be 105.696, which has been resistance and support for us for a while. We obviously see it was resistance here. It's resistance here. I think a third test of it after breaking from this resistance here, this will become support, and this will be our next test of resistance break before we start to push the upside. And again, once we break, 105.696 and we can consolidate, maybe, trade above and this becomes support, some of these higher ranges, it's very possible that we can get to 109, obviously, is one that's feasible if we break above that. Maybe a double top here, or maybe even we just get a blow off and we go up here. Again, that would have to be worst case scenario. Markets would have to be absolutely bloody. Capitulation, unemployment going sky high. Tons of things can affect that, but that's what I'm seeing. Obviously it's we're gonna have to wait and see, but break resistance, have it become support, and you just take one down at a time. It's like dominoes. One will fall after the other. Again, I think when the first domino does fall, everything else will fall after it pretty quickly. And we've been waiting for that first domino to fall where the markets finally see, some reaction to what isn't necessarily great macroeconomic outlook. So that's what I'm seeing with the dollar. I'm still bullish on this. I think it's going to break out of this ascending triangle down here, and then we're going to start to find some, consolidation here before we start to make our move to the upside. And this could take, weeks, a few months, and then this is something that I would definitely be thinking macro with. I wouldn't be like, okay, the dollar's going to go to 105 in the next 2 days. Could it if something bad happens, like a quick collapse? Absolutely. However, it's just not on my radar for the time being. So that's what I'm seeing with the dollar. Let's see if I can. I don't even know what I'm doing. There we go. That's what I wanted. Yeah, so that's what I'm seeing with the dollar. Let's pull up equity markets. Let's look at TradFi. We can see that the close is in about an hour and 10 minutes. Really interesting to see how the Dow played out today. Massive green candle to the upside. However, we might see some resistance on this line right here. Again, huge level of resistance for the Dow has been this 34,347. We've got rejected off of it a bunch of times, and we'll see how it plays out. In the next few weeks, I expect the daily, it looks like it's oversold at the time being. It'll probably go up a little bit more. If you look in the weekly, though, we are pretty overbought, so I wouldn't be surprised if we get rejected at this level, and we just do start to see some pain coming down. 50 might offer some support. However, I think that this is, if we're looking at this long term, we're going to have to look at this level as being pretty key support. And this is October of last year. But main one for me always is going to be, March of 2020. I think that the reason that we are in the situation that we are now is obviously because of the printing of the most amount of money in the United States history and within 1 year. But, it started with COVID, probably is going to end with the COVID price. And, obviously that could offer excellent continuation for the years following this huge correction, which is most likely what we are charting. So we can see that. Let's look at the NASDAQ, because the NASDAQ's been, blowing up recently because of the AI sentiment. While earnings, Meta had a pretty good day in the market today. We can take a look at that too. But we see that we're trading in this parallel channel. It's going to the upside, and we're talking about this weekly, which is extremely overbought. This weekly definitely needs a correction at some point. Every time it comes down to the midway line of the stochastic RSI, it bounces off it, and then it pushes to the upside. And then eventually it's going to have to come down. And these patterns where we're making higher highs and higher lows aren't necessarily bullish patterns. These are almost like a bull trap, most likely. Again, this is unsustainable. And one thing I do like to point out about the NASDAQ is this 50 and this 200 are relatively close. If a 50 and the 200 cross, that's considered a death cross. The last time we got one of those was all the way back in 2008, where we got it in, we got it in October of 2008. Obviously, this happened amid the collapse from September to 2008, but we did see a bit of a rally going in from March to May. And oddly, we're going into May right now, and we did see a pretty good rally from the beginning of this year till where we currently are. So am I saying history's repeating? No, but I am saying that it's very similar and reminiscent. I will say that these EMAs are a lot closer than they were back in 2008, though, currently. So it'll be really interesting to see how this plays out. Again, I think that's the COVID level is a pretty good level of support here. Obviously, it's a huge retracement, but again, we're anticipating something pretty catastrophic to the point where everything retraces similarly to how it did in 2008. So a 47% drop from here, is that bearish? Absolutely. But again, we see how fast these things can play out from where it was. Let's try 2008. Or yeah, let's go to 2008. That one would be really interesting. So that was 47% that we just charted right there. But if we look at 2008, we can go from this peak here to down here. It's 52% drop. It's feasible. Again, there's a lot more money in the space, so maybe people don't sell as much. But let's look at the dot-com bubble. Go down to the bottom. That's 83%. So, when we talk about a 47% drop from where we currently are, I don't think that's out of the question. It's not asking for too much, but it's just something to keep an eye on. And then S&P, we know that 42 level has been extremely strong resistance, but we're also trading very similar pattern. We're overbought on the stochastic RSI on the weekly. We can see the volumes have been coming down while the price is pushing up. That's bearish divergence. We got support right here at around 3,500. Wouldn't be surprised if we break from this structure and it goes down there. Recover for a little bit, and then we continue on down to maybe the COVID low. Again, I think the COVID low is not out of question. I definitely think that 32.25 is also a pretty reasonable target. But again, it really depends on how this market and the macroeconomic outlook affects retail and institutional investors, how they anticipate and how they want to play this game. Again, it really is going to be interesting. We're going into the summer months. The volumes are going to be extremely low. You don't really want price to be extremely high while the volume is extremely low, because then it's easy to manipulate. It's also extremely easy to push up or down the price. So be interesting to see. So we see that the equities are doing pretty well today. I think Meta, I just want to look at that real quick before we get into the crypto stuff, because the crypto stuff is my focus, probably what I'm most focused on. But look at that. This is actually a pretty impulsive move to the upside. This is 1, 2, 3. This could be 5 waves right here. And we pushed above the 200 EMA. And this is after we got the death cross. It's an extremely big move that we saw today. This is $30 up on the day, 14.67% for Meta. I don't know, man. Again, when we talk about NASDAQ and AI being a dirty bubble where people are getting extremely excited over something that's probably not going to take off for a good amount of time. Again, we're going into a pretty bad recession, most likely, if we're not in one already, which I anticipate we are. And I wouldn't be surprised if this thing, reverses all of its gains. Maybe a double bottom around 90. I wouldn't be surprised by it, because if we look at the COVID was somewhere around 141. This retraced below that. However, how confident are we in Meta for the time being? So maybe at the very least, I think that we are going to retrace to the COVID low, which is 140. I'm not saying that it's most likely going to happen. I'd be interested in see if that happens. I think it's a good chance, but this could be also it could just go to 88 too. It really depends. We can get a double bottom, or we can just make a higher low, and then this could be the start of a bull market. Maybe this one plays out better than the others, but for the time being, we see that it's extremely overbought on the weekly. On the daily, I'm afraid to even look. Oh no, daily pushing up pretty nicely. This will probably be overbought in the next day or so. And again, we're going into the end of the month, so this is going to be very different. May is a summer month. We're going to see tons of people exit their positions, take profit most likely. But tomorrow is the last day of April that the market is going to be trading in. So it'll be interesting to see how this performs tomorrow. But again, equities doing extremely well today. Dow was up 526 at the time of recording, 343 for the NASDAQ, 76 for the S&P. So it'll be really interesting to see how this plays out into the beginning of May. All right. Number one thing I really wanted to talk about is Bitcoin. And we're going to start with Bitcoin dominance because this is kind of insane. Right now, we're at 48.74. And if you follow us on Twitter, our Twitters are in the description below. You would have seen that we had a really big correction on Bitcoin yesterday. However, you wouldn't know from looking at the Bitcoin dominance chart. You'd have to go into obviously the hourly. And this is where you saw a pretty good run up. Then we got rejected down here, and then we kept on climbing. And last night, or even this morning, I can't remember when I sent the tweet, it was saying that, despite everything happening in crypto, we're still seeing Bitcoin dominance climbing. Are we going to, go full circle and just repeat the cycle? And most likely we are. However, dominance is higher than it was yesterday when we got that dump. And the dump that we're talking about was an extreme dump. You can see it right here. This is 100% manipulated. We saw a massive push to the upside yesterday, right around here. Yeah, Wednesday into like just massive. Let's see. All right, I don't know how long I was recording. So if I was I don't know what happened. I lost internet, but let's get back into the Bitcoin chart. Look at Bitcoin right here. We can see that it was up. We got destroyed here. So what I was talking about was Bitcoin shooting up to here, getting rejected. So it went up 1,600, down 2,300, then it bounced back up, and currently we're sitting up here. However, it's a little bit of a dangerous place because we're looking at Bitcoin dominance. It's much higher than where it was when it collapsed yesterday. Bitcoin dominance went from about 48.48 down to, 47.77. However, we continue climbing. Right now, we're at 48.73, 48.74 a second ago. So it seems like Bitcoin dominance is still continuing. This is absolutely creating no room for alts to take off. That's why we're not seeing super massive gains on alts. However, this is also seems like the market is extremely manipulated at this time frame. We see that Bitcoin obviously pushing up and down in both directions, pretty dangerous. I don't necessarily think that this is going to be long-lived to the point where Bitcoin dominance is going to be, ruling into the summer. I think this is going to find some retracement. I think this is the last move to the upside for a while before maybe we get some correction. But I do see this being like Bitcoin getting closer and closer, just trapping as many people as possible and just absolutely dumping. The higher this dominance goes, the worse it is for alts. We're at 48.74 right now. This thing could go to 49 before you know it. Most likely it's going to be 49 by today or tomorrow based on how it's trending. And even worse if it gets to like 50, 51. 51 would be that 200 EMA where it would test, find some resistance on. I'd be shocked to see if we didn't test that just because how fast it's growing at this rate. But again, that'd be catastrophic for alts because if Bitcoin decides to dump, and most likely it's going to, because if we look at Bitcoin's chart right now, we're getting pretty low volume over the past few weeks, but we're getting the price continue to push up. We're extremely overbought on the daily. Like look how low this volume is. However, the price is pushing up this much. Like that's a considerable push to the upside. I would not be surprised if we get this is 100% market manipulation. I'm not gonna sugarcoat it in any fucking way. This daily stochastic RSI is going to be pretty overbought soon. If we look at the weekly, it's been overbought for a good amount of time. We just came out of it. However, based on however we close this week, that might be that might just go right back into overbought, and we have another week where we're completely overbought. It's weird because we got this bearish engulfing candle here last weekend in the close, and that's a good sign that we're in a trend at the downside. But then we saw a massive pump to the upside, and a lot of people who are bearish got extremely bullish by that price action. Again, we're looking at low volume. Low volume is something that you need to look at. If you have low volume in a bear market, that's normal. If you have low volume in a bull market, that's bullshit. Again, you need money to be circulating into the space, and whether it's a mix of the DXY or absolute people going long or short on perpetual swaps, and market manipulators, market makers just liquidating everyone in every possible direction, which we saw yesterday. And shorter time frames, like that red candle that we saw yesterday that shot down 2,300, that was in like 15 minutes. Next thing you know, like hour later, shot up right back to pretty much where it was. So this market is extremely manipulated right now. It's kind of throw TA out the window, but you have to just keep an eye on some of the indicators to remind you that this could potentially be a nasty drop to the downside. Bitcoin dominance climbing, volumes extremely low, stochastic RSI extremely overbought, bears turning to bulls, and you're getting rejected at this supply zone. If you get rejected again at the supply zone right around here, I don't think there's any strength above this level, though. I think we did put in the top right here on Monday, April 10th. I don't think we're going to, not Monday, April 10th. What was that? Friday, April 14th. That was when we hit 31,000 to the dot. Again, that's on Binance, and that just is extremely fishy. So the fact that there's no demand above this, and we're just seeing distribution at these levels. We're seeing a little bit of demand down here, but we're probably gonna get rejection at this level in the supply zone again. Maybe this pattern does play out to the point where we're talking about this massive head and shoulders pattern, where it began all the way down here in January. We put in our left shoulder in March of this year. We put in our top of our head Friday, April 14th. Then we just got to continue this head pattern to get down here, and then we'll continue on with our right shoulder before we break down, and maybe that brings us into lower lows. Just something to see. Bitcoin dominance just hit 48.75 as we were just talking to. So yeah, tons of stuff in the charts, tons of stuff that's going on. We got some GDP data, we got some Bitcoin data. We're seeing tons of manipulation in the markets. We're seeing tons of funding rates, just absolutely absurd. Like Binance continues to baffle me. I'm going to pull Binance real quick. We're going to go to CoinGlass. And this will be the last thing that we take a look at. Yes, I want to leave the site. We want to go to CoinGlass. Perpetual swaps on Binance, negative 0.0632%, while everything else is pretty neutral. We see in white. Yeah, that's just, there's something fishy about Binance and BNB coin. And then we see that Bitcoin shot to 31,000 to the penny. And then we're seeing tons of negative price action and positive price action and liquidations in both directions. I don't know, man. It's a little fishy. People holding perpetual swaps for BNB, whether it's primarily shorts because the funding is so negative, are trying to be pushed out of their positions. I don't know, man. It's a little bit fishy for me. I'm still vigilant on this. I have a position on the BNB, but at the same time, it's like it's very similar to something that we saw with FTX. I'm not saying that Binance is going to collapse, but I am saying that this has to do with the volatility, most definitely. I say most definitely, but let's be honest. We're seeing short squeezes in both directions, so be really interesting to see how that plays out. Again, that's pretty much all I'm seeing for the charts going into tomorrow. We're going to be back with some PCE data, so hopefully we'll have JWeb join us and we can discuss all of that. Again, I don't know how long this show was not recording for, but that's pretty much all I got for everyone today. Thank you so much for being here. I know I said it's going to keep this short. It's almost 30 minutes, but tons of stuff to talk about. Always happy to talk about this stuff. If you got any questions, drop them in the comment section below. Give us a like, thumbs up, subscribe, thumbs down. If you hate us, that's cool too. I know a lot of perma bulls probably aren't fans of us, but is what it is. Happy to be here. We're just going to provide you the facts, nothing else. And again, we're not financial advisors. Nothing we say is financial advice. I say all this stuff, but at the end of the day, I could be dead wrong, and I'm open to the fact that I possibly am. So thank you so much for being here. I'm really excited to get back into this with JWeb. Hopefully he's around for tomorrow, and we could talk about some really important PCE data. So that's all I have for me today. Take care, everyone. We'll see you next time.